let's welcome on board Sampath Reddy, CIO at Bajaj Allianz Life Insurance, joining in on the show right now to talk about where he's making the market to be right now. Sampath, hi, afternoon. Good to have you on ET now. Just wanted to understand how is it that you're mapping the market construct right now? Well, with 3 to 4 odd % away from an all-time high on the Nifty, but at the same time, just looking at the F&O positioning, looking at the under ownership within the HNI community, or for that matter, the fact that FIIs have just about returned to the market, gives you hope that there are more legs to go for this rally.
Actually, if you recall, markets have rallied quite well from the last 1.5 months from the lows. They're up almost like about 5 to 6%. I think large part of that is driven by, the softness in the interest rates. Inflation worries were there whole of last 1 year, 1.5 years, but now that seems to be behind. Inflation for the latest month has actually come below 5%. Interest rates in the last 1 month have also actually come down substantially today. The 10-year is just about 7 or even slightly below that. All of these factors are actually, adding, to the rally in the markets. And of course, coupled with that, FIs which were sellers, until a few months back, until a few weeks back, turned into the buyers. So all of that is also helping the market to, stage a strong recovery. And not only that, interest rate season for the Q4 seems to have ended quite well, and there wasn't any, disappointment, I would say. Some of the large sectors like banking has done exceptionally well, and today, the banking sector, which or lending sector, let's say for instance, account for almost about 35% of the market in terms of indices or in terms of the overall profit pool of Nifty 50 companies, and that segment continues to do very well. Today, the large part of the thing which represents the Nifty 50, which is BFSI space, is at one of its best position in terms of, if you look at the NPAs of the banking sector per se, they are multi-year lows, and the net interest margin, if you see, they're also at multi-year high. Large part of the corporate NPAs which were totally behind us now, and bulk of the growth for the credit is coming from the retail where the asset qualities are much better. So overall, I think markets are positioned quite well, and we have been of the opinion that somewhere during the middle of this calendar year we could see a strong recovery in the overall equity markets. That is largely because the interest rate hiking cycle would have been pretty much behind, which now it looks like interest rate cycle is close, certainly interest rate hiking cycle is certainly behind. So based on that, we continue to believe that middle of this year, calendar year, we'll see a strong recovery in the equity market. I think we are already in that midst of recovery in the equity market, I would.
Expecting a bit of a recovery in the second half of the year, or at least in the next few months. Sampath, we'll try and reconnect because the line seems to be a bit patchy. But in the meantime, let's go across to my colleague Shara to try and understand whether the retail participation in the market is high or not, because it looks like that the demat account opening, etc., has been petering a bit, and the overall, participation from retail investors has also ebbed a bit. Shara, tell us what's the data pointing to?
Well, yes, demat accounts, new opening has actually come down for the third straight month, and do remember this is coming at a 9-month low. Now, apart from this, also do remember that it's down almost 16% on a month-on-month basis and a 25% degrowth when it comes to the new account additions via the demats. Now, if you look at the FY23 average demat numbers, that comes at a monthly pace of almost 21 lakhs, and currently sitting at the month of April itself, the number has fallen to 16 lakh. So that is something which is important. And apart from this, do remember CDSL has actually gained their market share, but there are certain reasons also why the impact is happening on the slower demat account additions. This includes job sentiment, which is coming in mixed, with of course IT hiring freeze are happening across the sector, cost-cutting measures in the startups as well we are seeing, and also the volatility in the markets over the last 2 to 3 months, which has actually impacted the demat account additions. And we can see over there in the screen itself the incremental demat accounts that has been following, and we see over here in the screen that the entire total demat accounts has also actually gone gradually up to almost 11.6 crore accounts totally. Apart from the demat accounts, another important data point we have got is the active user client base, and that has fallen consistently for the 10th straight month as per the data by NSE. And lastly, the SIP numbers is something which I'd like to point out, that is coming in at almost 2-month low, and do remember it has fallen almost 4% on a month-on-month basis.
Those were the key internals. Sampath, your take on some of those factors that my colleague was pointing out to, the fact that the SIPs have slowed a bit, the demat addition has been lower, and even the mutual funds are sitting at higher cash levels than earlier. What's your take of how the retail participation is actually expected to trend going forward?
Yeah, I think, domestic participation has been quite good in the last couple of years, and especially the number of, the new investors in the market has grown tremendously. In terms of whether the number of new demat accounts or etc., all of that has, done exceptionally well in the last 2 years. Of course, from the peak, the rate of growth may not be, that high, because given that, there has been a substantial growth in the last 2 years. But if you look at the flows into the domestic institutional investor, whether it's mutual fund or insurance companies, there continues to be quite good. Last few years, domestic institutional investors, including HNI and retail, have been a big supporter of the Indian equity markets, in spite of there were some, outflows from the FI side. We continue to believe that equities offer an extremely attractive proposition for domestic investors. I think there will be a small periods here and there, temporarily based on the valuation, based on the certain events. There could be a small outflows here and there, but in the longer term, I think domestic liquidity will continue to be quite strong for the equity markets as such.
Right. Sampath, good to have you on the show. Unfortunately, we'll have to let you go. We're having a bit of trouble with the audio line there. We will see you again soon.